Minutes.
So moved.
And there's Warren.
Morning.
Warren, you've got to unmute.
I move that we approve the minutes.
I said.
You got a
can-
motion?
Yeah. And Warren will second that.
I'll second it.
All in favor?
Aye.
Joe, you want to do a
Let me
financial
see when it-
update?
Yes, I will do the financial update, but with that being said, this will most likely be the last financial update because I will be passing it on to Marcia, who is on with us today. He joined us yesterday and did a fabulous job. I am very happy with how things are going just after one day. I have no doubts she will be able to handle this position and do a great job and present well. So I did put her on notice that next month, April, she will be presenting. But I felt that for today, since she didn't know any of the information that is being presented today, that I would handle today. So with that being said, the reports at February 28th show the fund balance to be 17.9 million with 2.8 Putnam funds and 4.1 million Westchester funds and 11 million FAD funds. The checks drawn today, well, this doesn't report really, these reports are just the statement of financial position, revenue and expense, and cash flow, which don't reflect what I am saying in words, which are the cash balances. They do obviously report it on the balance sheet, but these are different reports that I give to you every month. The checks drawn today are $31,077, and of that, we have March expenditures in the amount of $8,586.
Anybody have any questions?
None.
All right. We have scheduled a presentation from our auditors.
Yes, now Patty, I see you're on. I do not see Joe on. Is Joe Montaldo on the call?
I don't see him on. I just checked his calendar. I think his invitation was for 9:30. I could see if I can get him right now to present.
Oh dear, okay.
Yeah.
Linda, did we send the revised invite?
I sent it to everyone that was included
On
on
the
this list. Some
Okay, so
people
let's,
did not accept it.
Let's skip over that for the moment and move on to reporting and filing dates.
Yes, so we are moving forward with that, and April 1st, we have New York State ABO reports due, and those will all be fine. They're ready to go as soon as this audit is presented and accepted by you. March 31st, we will be sending over to New York City DEP the project accounting report, which Vinny and I and Rich have a meeting next Tuesday to go over that if there's any questions. So all of that is scheduled and ready to go. We will meet the deadline next week. Of the specific compliance forms due, we have 6 members who still have not sent back this year's forms, required forms. So I've been in touch with people by email and trying to get those last few forms in, and I expect they will be in this week. I'm working with Joanne Daly by the governance committee, and I, again, don't anticipate any problem getting that done.
Excellent. Kevin, you want to take us through a project update?
So the latest update that we had is we'll be signing a.
Kevin, I'm barely hearing you. How's everybody else? Can you hear Kevin?
No.
Okay.
I thought
About
we were
now?
gonna. Oh, that's better.
That's better. Okay. Sorry. So our latest update that we've got is coming in from the Army Corps of Engineers, where we've been able to secure just shy of about $100,000 to go towards MKNC 22 in Leonard Park to wrap up that construction this spring. Just yesterday, Rich and I believe Christine signed the necessary paperwork that can get sent down to the Army Corps to finally execute that agreement. And we can begin scheduling the wrap up of that project this spring, which will push us towards being able to bank the approximately 9 kilograms of phosphorus reduction for that project. So that'd be great to get that one off our list. We are looking to go to construction for 2 projects, channel stabilization projects, which are both to be installed within FAD basins, Carmel CF 601 and PR CR 701. The next project to go to construction is expected to be either catch basin inserts in the village of Mount Kisco or the installation at Sculpino Park in Southeast. The installation in Mount Kisco is awaiting confirmation from there. It's on private property, so we're waiting to hear from Urban Edge, who is the manager of the property, for the installation agreement. The project in Southeast is waiting for permitting. As you guys know, we ran into a turtle issue, and we are managing the turtles. And hopefully we'll find ourselves constructing that project within the next few weeks. The one item I wanted to touch on with everybody is circling actually back to Metro North. Now, as you all know, we had targeted a lot of projects along the Harlem River line in Metro North properties. And whether it was Metro North properties or owned by DEP and was also managed by Metro North, we run into an issue of having to negotiate with the MTA in order to install these projects. Now, that's been a very slow process over this past year, but we were able to get comments back from Metro North and their attorneys. And after review by myself and Christine and Patrick, we feel we're at a point where we need to make a decision on these types of projects with Metro North. Essentially, they took our installation agreement, reviewed it, and pretty much rewrote the thing in entirety. A lot of the items that we wanted to make sure we protect ourselves with, they would not allow. What it comes down to is we need to have a discussion of what the risk is on these projects and whether or not we're willing to accept it. They wanted to enter into, rather than allowing us have these projects in their perpetuity, they want to have it be a 10-year term, which then can renew every 5 years after that. They want to be able to remove the inserts whenever they see fit, whenever they feel there may be an issue or that their real estate or their parking is at risk. And that boils down to our biggest problems with that installation agreement, I think. From my perspective, now keep in mind all these projects at each individual site, to say it's about $20,000 to $30,000. That's the range that we're talking about for an installation at any given site. In speaking with Metro North over the last year, their concern comes down to what if our parking lots flood? And what if this backs up? What if you don't maintain them? What if they're left to just sit there and cause a problem for us? It's not so much an issue of we don't want to help. We don't want to have anything to do with this. It comes down to, well, what if these fail and now we have a problem that you have to go fix?
Kevin?
Yeah.
Kevin, we would be in the same situation. I mean, if they don't work, we're going to be taking them out.
Yes.
We can't leave it. So, they're just, I don't see it as unreasonable. If they were doing it to my property, I would ask the same thing. And I would assume that they would maintain them, and they're assuming we would maintain them. But if we don't, they need a recourse. So I don't know as it's that much of a risk. I think what's the benefit for the 30,000? How many kilograms on average are we getting out?
Depends on the site, but I think from the range of like 2 to 5. I'd have to look back at the sheet itself because each site's a little bit different.
Yeah, so that's such a high, low cost.
Yeah, for per kilogram, the cost that we have per kilogram is fantastic for these. In the event that Metro North, let's say, doomsday scenario, Metro North said, you know what, we're tired of this, get him out. We don't want it. Yes, we lose the kilograms. We don't get that reduction, but we don't necessarily lose the product, because then if we were to take these inserts out of the catch basins within those properties, we could still, in theory, reuse them somewhere else.
Well, they all have-
They're special fit to individual catch basins, but if we find the catch basins that match those dimensions, they can be adapted to fit a different site if we needed
All of
to.
These have bypass if they get in a situation where something clogs or there's heavy rain, they all have bypass. The question is whether the bypass will handle a 10-inch rain. And, you'd have to tell us whether you think it would be able to shed the water sufficiently.
Right. In those scenarios, if we're talking about, Hurricane Tony that comes through, nothing's going to stop it. Nothing's going to be able to pass that amount of water.
No, but the question is, instead of draining in a half an hour, is it going to drain in 35 minutes or 40 minutes, or is it going to take 5 days?
Right. And these are all designed to bypass. I'll take a look at what they're designed to bypass exactly. I don't want to misspeak, but I believe it should be in the very least a 25-year storm, if not the 50-year storm. And at this point, it's kind of, what really is that storm?
A
How often does
50-year
that occur?
storm happens every year.
That's the thing. Yeah, that's what I was about to say, Peter. So from my perspective, while I'm concerned that they looked at our agreement and basically washed it away, I think that once we get these basins in and they're functioning, I don't believe that Metro North is going to have an issue with the product that we have in the installation. We will have a private contractor visiting these sites to replace them annually, to clean them when needed. And between Corey and I and any municipal staff that visits the sites, we'll make sure that these are clean and that there isn't going to be an issue with clogging. So to me, the risk is there that they could turn around and we could lose kilograms, but I don't believe that we're going to get to that point where they're going to feel it's necessary to do that.
And I would agree with you. If they do feel it's necessary, then they need to come out anyway, right?
Right.
They're not functioning properly. So I don't know if we want a performance bond or something like that back to the company that's making these things, or whether they warranty them for certain, engineering, specs. But I don't, look, I've dealt with the MTA. A lot of us have, for if you have a train station anyway. And this is how they go through things. And they've always been very easy to work with, but the contracts aren't always the easiest things to get through. So I agree with you, Kevin. I don't have a problem. I'm sure maybe there's some other comments.
No, so just let me just ask, Kevin did a really good job of explaining this and going over it. I guess since we have Vince here, do we have any comments on this issue from DEP?
I don't have anything. I haven't looked at any agreements or.
This would be QUIP funds, would it not, Kevin?
Depends on the site, but I'm pretty sure they're all QUIP funds. Yeah, I don't think we have any FAD or FAD connected sites.
So Kevin, I mean, the one thing I'm concerned about is the 10-year agreement with the 5-year renewal, and making sure that both DEP and DEC are going to be okay with that.
Okay.
And I think we should send both DEP and DEC a letter, explaining it and making sure and getting something back in writing. So we've got something to hang our hat on, that, if we do this project with a potential 10-year limitation, that they're going to be okay with that.
Right, exactly. I don't want to enter into a contract and have them immediately say, this is a problem, you shouldn't have done that, I want my money back.
Right.
Understood.
Are one of these things at the Purdy's train station?
Yes.
Okay, so they don't own the property. The DEP owns the property, and they're leased at periods of time, which is maybe one of the reasons why stuff like that. So, I think we know all the parties. We can probably address it by talking. Maybe we can talk to the MTA, or I can talk to Mark Mannix or somebody, if somebody else knows somebody down there. He's the government liaison guy. And we just say, look, this is where we are. We want to go forward with this. It's a huge savings. Could you explain why the 10-year? And he's probably going to say, because we don't own all the properties, we lease them, and they're for so many years. And a lot of them, because it's along the reservoirs, that's where they put the trains, at least in my area. DEP owns it.
Right.
Can you put in that letter that you're paying for these with water quality funds, and Also, one other question with regard to Purdy's. I had seen a plan at one point that I guess there was an issue with MTA and you had thought that you were going to use like a separate chamber, not in the parking lot. Is that plan not?
Well, yeah, Vinny, you're talking about what I've been doing is trying to find other ways around the issue as well. And
Right.
so what's happening down at Purdy's is kind of a special case because if we had just treated everything within the basins themselves, we actually would be losing out on a lot of kilograms. At Purdy's, we could take a different approach and actually install a vault right adjacent to the Muscoot Reservoir and get a lot more reduction. And now it's, of course, it's at an increased cost, but it's also an increased kilograms. So we're going to balance of what that approach might be in terms of, you know, efficiency and how it's going to impact the project. But that is an alternative that we might go forward with.
So
That's just at that one site. At the other sites, it's a little bit different.
It's still being considered. Yeah, I just, I think there's two issues at least that I could see potentially from DEP. One, you have the land use permit issue and what that particular group would require, and then you have the funding issue, which I think is okay if you're using water quality funds, but so I would need to take that back and talk to a few different groups.
What would be the issue if we're using water quality funds, Vince? Or you
I'm
don't-
saying it would be better if you were using water quality funds. If you were using Fed funds, and then, with this 10-year thing, I don't know if it would be an issue or not. Maybe it wouldn't. I don't know.
Well, again, I'm sure that's in the contract like that, just so that they're sure that they don't want to foul of any of their leases. A lot of these places they don't own.
No, I agree. But if you're using money from our funding agreement, I don't know if that would in some way be not okay with our auditors. And
Well, yours, for you, it's a capital expense. Everything over, I think everything, right? Over $25,000.
yeah, 25 or 35, I can't remember.
Yeah, so yours, it's all bonded for you, I think, the Fed money. So most of it's considered capital, and the capital there really isn't a 10-year useful life probably on some of this. It's probably longer.
Yeah.
That may be one of the sticky points. You may have it as a 15 or 20-year life, the funds.
Actually, I think it might even be more like 30. The useful life is built into the definition, so.
Yeah, if you could take a look at that, and that may be one of the issues then with Fed funds.
Yeah, since it's not Fed funds, I don't think it's an issue, but a letter would be good, so I know exactly what I'm asking.
And it's another thing, sit down with Mark Maddox, once we figure just a couple of things out, and Vince, if you could just make sure that the DEP has no issues with these going in. Maybe we can just sit down with Mark Maddox and just say, hey, here's the issue. Is 10 years a hard number for you, or can you go further out simply because of some of the FAD issues and stuff? If Vince finds out that it's okay if we do a 30-year thing. But I think to their point, they want to make sure that if we're not maintaining them properly, they can get them out. And if they're not doing what we said they're going to do, and if they're going to back up water, right, they want to be able to take them out.
Yeah.
They're going to want us to take them out. They're not going to want to do it, but everything else equal, they'll take them out if it's not done by us.
Yes, yeah, that's exactly the point they got to make.
And I also want to say, like with the land use permit, and I don't know where you stand with that group and your discussions with them, but my understanding of this issue from the past was that we need to see something from Metro North that they're okay with you guys installing this. And then I think it was sort of that we would modify the permit with Metro North to account for these new structures. I think that's what we came up with in the past. So
that's right.
Yeah. Okay.
But you guys count the length of the pipe and the number of catch basins and everything else. What do you care about a catch basin insert in those land use permits? I've never seen anything like that even tracked.
I think it comes down to maintenance of the structures. If we're going to claim that we're going to maintain them, then now it changes the land use permit for Metro North. Because right now they're on the hook for the maintenance.
Okay, so I'm talking about the one we just put in Croton Falls, which we're under that lease, and I pay land use permit fees and stuff for that property, which is DEP property. They're all different. Look, I think what we need to do, I guess to net it out and to shut me up, I'm not upset about it, there's probably some issues that we have to figure out. Vince mentioned some. And I think we just go back, whatever the sticky points are, we go back to the MTA. And I think Mark Mannix, who's the government liaison person, he could be our interface over to that organization. We just have a chat with them, say, these are our specific issues. It's not that we don't want it, but it needs to be 30 years or could it be this? And we'll see.
All right, Kevin, you done with project updates?
Kevin, one question. You've got all the parking lots in Golden's Bridge included? There are 3 separate.
Yes. I'll look back at that again, Peter, but I'm fairly certain that we have
Okay.
everything included within Golden's Bridge, which is
And
kind of
we're
a hodgepodge of who owns it.
Yes, that's what I was thinking.
Yeah.
Is there so all of those 3 would eventually get, assuming we come to some agreement with the MTA, we would
Right.
put it in all of them?
Yes, that's the plan. Yep.
If there is a specific problem, I'm prepared to get involved.
Great. Thank you. Okay, now I'm done with project update, I think, unless anybody has any other questions.
All right, so if we can circle back, I see Joe has joined us. Morning, Joe. You're on.
Good morning. Apologize for my tardiness there. Didn't realize it got switched, and Patty said, "Hey, started at 9." So, in any event, does everybody have a copy of the financial statements with them?
Yep.
Okay. Kind of the way, I kind of go through these things is, I just kind of go through page by page and identify some things that I think are important, and some things that I'm trying to bring some information in on. I like to keep it as an open forum. So if anybody has any questions, please feel free to stop me at any point in time, and ask those questions. And I'll try to give you, answer your question as best as possible. If I can't answer it at this point, I'm more than happy to get back to you with an answer. So please feel free at any point in time, like I said, to interject or to kind of stop me and ask some questions as we go. With that being said, going through the financials, if we take a look at page 1, is our independent auditor's report. This is a standard report, obviously, that we need to include in all of our audits. What we've issued this year is an unqualified opinion. That's the highest of opinions that you can receive. Basically, we're saying that we're opining on these financial statements, and there is no, or we have no concerns of the risk of materiality of these financial statements being materially overly stated or understated. So that's our standard report. Moving on to page 3 is the statement of financial position. And this particular financial statement is basically the equivalent of the balance sheet for a business organization. What we have here is a comparative of the assets and liabilities from 2020 to 2019. Some items of note we see there where the cash and the cash equivalents increased about 6 million from 2019, and the kind of the contra effect of that is the short-term investments decreased by about 9 million. And basically what ended up happening was some of the short-term investments were basically moved into cash and more liquid use for going forward.
If I could, part of that, just if I could just make a comment, and Joanne, the rates we were getting were so poor that we just left it in cash in the bank. We're getting like 1.8% and went down to 0.0 something. It was pretty bad.
Right, and basically that took it out of that short-term investment, moved it into cash, increases liquidity so you could use it as you need to go. You didn't have to kind of be held up, with our hands tied if something was to come up on future events there. That's the main changes basically on the asset side down below where we have the deferred revenues. This is basically the change in the receipt of the 2019 monies that we have to defer. Basically, we're saying we've received those, we haven't necessarily earned those, so they haven't been taken into revenue yet. As we go ahead and earn these funds each year, those are basically moved into revenues. So you'll see the change there. as it's decreasing each year as we're recognizing some of that revenue. Down below, the net assets with the donor restrictions. This basically ends up being the organization's the equivalent again of the organization's basically net worth, basically the accumulation of the assets over the liabilities since inception. You see that increased by about 200,000 this year, which is basically the change in the net assets, as we'll see as we go forward into the report. Moving on to page 4, the statement of activities. This is pretty much the profit and loss statement for the organization. What we have is 2 columns here without donor restriction and with donor restrictions. Because of the type of revenues that the organization has and the agreements, we bring everything in originally with donor restrictions. Then as we satisfy those restrictions and spend those funds, we basically move them over to without donor restrictions. And this is basically a breakdown of the different types of revenue, program services, O&B, or O&M, I'm sorry. Again, there's our reclassification as these are being satisfied, and then expenses for the phosphorus removal and the O&M services, bringing us basically down to what our change in net assets are, which were 196,000 this year to the better. So basically the organization had a profit of 196,000. That's added in the beginning net assets, giving us the ending net assets that agrees with the prior page. Oh, thank you. Moving on to page 5. This is the same exact report as the previous page, but it's for 2019. It reflects all the same information just for the prior year. Page 6. Page 6 is a statement of functional expenses. What this basically does is break down the two types of expenses that were reported on the previous page, the phosphorus removal and the O&M services, and kind of gives us a detailed breakdown of the individual expenses that make up each category. Those are total to get us our program services there. And then as you also see, we've got our admin and general expenses, basically, which are the regular expenses in order to operate the business outside of the program services. Those then get totaled and reflected back in again in the statement of net activities. Moving on to the next page. Once again, same report for 2019, showing the same information just for the prior year. Page 8 is our statement of cash flows. Basically what this financial statement shows is a reconciliation of the beginning cash to the ending cash, broken out by operating activities, investing activities, and financing activities. And it kind of summates each individual area, and then it reconciles back. So down below we see the 4029, 986. From 2019, that's our beginning cash and cash equivalents for this year. Again, the differential on the 2 is the 6,000 or 6 million, adjusting our ending cash to the 10,042,248 dollars that we ended with at the end of 2020. Sliding down below on this page, this is a reconciliation going back up to the operating activities portion above. So it basically takes our ending or our change in net assets, adjustments for items that are not operating in relation. For instance, change in fair market value of the investment accounts, that's not a regular operation expense. Depreciation is not considered regular operations. Those are added back. And then we go ahead down below and show the delta, the changes in the assets and the liabilities, which affect the operating side of things. And then that gets us our net cash used by operating activities. And that 2,236,212 will tie to what's up top in the first portion of the net cash provided by or used by operating activities. In this particular schedule, we show 2020 and 2019 next to each other, just because it's easier to report that way for this particular schedule. Moving on to page 9 is where we begin the notes to the financial statements. Note 1 is our summary of significant accounting policies. The first portion of it is basically an explanation of the organization, the services it provides. Going on to page 10, again, financial presentation. It explains the financial presentation, how the reports are being presented, the basis of accounting, which is the accrual basis of accounting, cash and cash equivalents, anything liquid within three months of year end, you consider cash. And it gives an explanation of each of the individual, these items are required. We're required to identify each specific item that we have here, and we give an explanation of how the organization accounts for them. Moving on to page 11. This is basically the same. The top portion is the same as the prior page. Again, required items that we have to identify and disclose within the financial statements. Note 2, concentration of credit risk. This is basically a calculation of the organization's bank value, cash in bank at the end of the year. And basically we take into account the FDIC insurance, and then the organization also has a collateralization agreement. And this year, to the better, we're actually over collateralized this year. Last year we fell a little bit short, and we were under collateralized in the 2019 ending balances. This year, I believe Joanne worked with the bank, and basically we got those amounts to be collateralized increased, and we now have exceeded, and we comply with New York State requirements.
Can I ask a question here?
Yep.
You know, they understand they have to do a certain percentage, and maybe you or Joanne can answer. Why would we fall under the amount?
I dealt with them. They literally just made a mistake in the calculation, Warren, last year.
Okay.
So that's why I went back to them and they found their mistake, and they have to pick up the 5 bank accounts at AIM&T, and I think they missed one or something.
Right.
Gotcha. Okay.
I think I remember that being what you had told me after you contacted them, right? They had missed one of the accounts there.
If I could just ask a question, I don't want to go back necessarily, but you talk about interest income on page 10. And one of the things you said that with donor restrictions, there is no restriction on interest income as far as I'm aware, correct?
I believe it depends upon the funds. I think with the DEP funds, I believe that they have to be used for specific purposes. Until those purposes are met and complied with, and then we release the restriction on them. But
Even the interest?
Yes,
Yes.
Warren.
Yep.
Within the FAD agreement, there are certain things, as long as, certain administrative reporting that are tied into specific programs or projects are covered. It's right within the FAD agreement. So I have not spent any of the new FAD interest. We did spend of the original FAD agreement. We did spend that original FAD interest, but since we earned so much with the investments, that is just sitting there waiting to be used. It has not been utilized yet. But there, it is something
everybody's aware too, and I know we brought this up a couple of times. The great job that Joanne has done on this. I think this year was 276,000 in interest income. Last year was the rate's a little bit better this year. Last year I think it was 114,000 or so. You know, when we don't make the change, I know Rich sees it, I see it, Sam O'Berry sees it. I don't know who else, Tony Hay. Every time we have money either coming in or money available to go out, Joanne sends a note out to everybody. Everybody gets involved and basically approves the rate with, is it Ramirez and Company? Robert Fuhrer is the person that we've been working with on a lot of that. So it's a very structured process. It just doesn't kind of happen, but Joanne is, I just want to publicly thank her because, I mean, basically last 2 years, it's been just under 400,000 that we have as interest income. And if we weren't doing that, we probably would have come in far under 100,000 in income. So it makes a big difference when we look at the uses and stuff of that money. So just
Yes, agreed.
Continuing on to page 12, this is a continuation of the note 2 above, and it gives the breakdown of the bank balance, the FDIC insurance, and the amount that is collateralized with the bank. As I previously mentioned, last year we were uncollateralized, as we discussed, by about 179,000. This year that was taken care of, and we are now over collateralized or meeting what we need to meet as far as New York State regulations go. Note 3 is our investments, and basically this shows the breakdown of the fair value and the cost basis on these investments. Again, as I referred earlier, the investment balances are down because of the fact that, as we spoke, some of the short-term investments were basically transferred over to cash and reported as such this year. And again, it's just fair market value versus the cost basis. And these are usually pretty close, consistent, because most of the assets or the investments are in U.S. Treasuries. And then we go down below and we're showing the interest calculation that Warren was just talking about there, the interest that was earned basically on these accounts from 2019 as compared to 2020. And just to note, the 276 that was earned on interest, I think, if I'm not mistaken, that covers the salaries for the organization. So by itself, like you said, the increase in itself basically covered the salaries, right off the top. So we've got more funds then to kind of apply against, the programs. Moving on to note 4. Another extension of the fair market value or fair value measurements, broken out by what we call different levels. Again, our quoted prices are basically due to the type of assets that are held within the investments, again, being the U.S. Treasury, they're easily obtainable information. And again, it just, as with almost everything in our industry, it's very repetitive, telling us again the same information over again. Moving on to page 14, the receivables. This is just a caption of what makes up the receivables as of the end of the year. And again, they're pretty much the due tos and froms between receivables and payables, back and forth between the related parties within the organization. Liquidity and availability on page 14 and 15. This is basically just a reconciliation of showing what our liquidity is going forward, based on what our financial assets were at the end of the year, and then taking into account other monies that have already been tied up or that are being reported as receivable as of the end of the year. So it's basically intended to show how liquid we are, how available or how capable we are of paying our expenses going forward. Obviously, we're in a good position with these numbers going forward. Note 7, property, plant, and equipment. This is a summary of the equipment and the other fixed assets of the organization, broken out by the historic cost, showing the accumulated depreciation taken to date and the net book value on each of these categories for 2019 and 2020. Depreciation expense, again, minimal, based on the amount of assets we have. 2,300 this year, almost 2,400, and about 2,700 for last year. Compensated absences. This is our required footnote that we have here, basically, which if the organization was to allow its employees to accumulate unused sick or vacation time, there would be a value placed on that and shown as a liability. The organization does not have that. So as of 19 and 20, we've got 0 reported for each of them, respectively. Note 9 on page 16 is the deferred revenues. This is the explanation of the funds that were received from the DEP, basically by year, and the amounts that have been expensed to date on them, basically reconciling that beginning amount less the amounts that have been recognized to date, giving us our ending balances that we've reported within the statement of financial position. Commitments and contingencies. This is kind of a long-term footnote. Basically what this does is outline the lease agreements for the building, and then also for any office equipment or vehicles the organization may have and lease. And expends it out and reports it over a 5-year period, basically to be able to show the future obligations the organization is contracted and has out there as of the end of the year. We see it goes through 2023 because that's when it looks like the final lease on the building is up. Once that's renewed, if that's the decision, obviously that note then will extend going forward for the newer and applicable information. The O&M receivables and payables, this is basically a description of the activities which are being refunded, or not refunded, but reimbursed by the specific entities involved. And it gives a recalculation of what's due to and from the organization as of the end of the year, broken out again by year. And those tie in obviously back to the statement of financial position as of year end. Moving forward on the note 10 to page 18, we've also got part of this here being the FAD agreement, where basically we identify the agreements that have been identified within the contract. That goes on. Obviously, there's no date on that. That goes on through the operations of the organization. Note D, or portion D, there's the potential commitment and contingency related to the coronavirus. This is basically a standard note we have to include in all of our financial statements going forward, just based on the uncertainty, going forward of what may be. Down below, note 11 is the footnote on income taxes. Basically here, we just identify the fact that the organization is exempt from income taxes due to the fact that they're a 501c3, and that there are some open periods that are out there for the last 3 years worth of tax returns that are filed. Potentially the only contingency with that is that the excuse me, the organization could be audited by the IRS, at which point it's very, very rare that I don't think I've ever seen any of them are not-for-profits, knock on wood, audited by the IRS, as we pretty much are all doing what we're promising to do with the funds we've received. Related party footnote. This is a footnote here. Basically, it appears that one of the board members' sons had worked on or was an owner in one of the companies that the organization contracted with, and basically it was just recorded required to be disclosed. And I believe that, if I'm not mistaken, that board member actually even did not weigh in on the voting of whether or not to basically approve that contract. Subsequent events, the final note there is basically just the fact that the organization, a statement that the organization has evaluated subsequent events through the financial statement date, and they have noted that there is nothing in addition that they need to make us aware of that may include or require an adjustment or a disclosure within the financial statements themselves. The next portion of the report is supplementary reports. This is basically a breakdown of the program services and the general and maintenance expenses broken out by county between Putnam and Westchester County, and also shown by the quality impairment program and versus the filtration avoidance and termination program. So again, it's a little more deeper of a dive than the statement of functional expenses that was previously in the report, broken out now by county and by type. Those numbers will tie back into the other statement of functional expenses that were previously included in the report. This is for 2020. The next page is the same information by county for 2019. Again, this will all tie back into the 2019 numbers. Schedule 22, page 22. This is a schedule of the filtration avoidance determination committed. So basically, these are contract amounts that have been agreed upon, and the amounts that have been, the contract amount and the amounts that remain on those contracts. So we give a breakdown here based on the FAD and also on the upstream basis there for years 6 through 10 of operations. The next page, page 23, this is a standard report. Basically, what we're saying that here is that the organization complied with governmental auditing standards, even though the organization is a not-for-profit because they are funded by local governments. We have to make sure that they're complying with local government auditing standards. And again, this report, the same thing as the other report, issued an unqualified opinion. Basically, again, being the highest of the quality reports that you can receive. The very last page here is the independent auditors report on the compliance with section 2925, the New York State Public Authorities Law. This is basically a standard report that we have to include in there, basically saying that nothing came to our attention, that they failed to comply with this law, specific laws in relation to, I believe it is in relation to the and environmental requirements. Same thing here. We basically issued nothing that we found that would lead us to believe that there's any reason that you have not complied with them. Normally, at this point, I would share a management letter with you guys if there was any management letter comments that we had. And basically, those are items that we have noted during the course of the audit that we feel need to be brought to the board's attention. We found nothing. Everything seemed to be operating well. All our questions, Joanne was able to answer, provide any documentation for that we needed. We didn't find any specific defalcations or anything in relation to internal controls that we felt were necessary. Again, we did have one last year, and only because of the fact it sounds like the bank wasn't correctly calculating the collateralization, which Joanne went ahead and corrected this year. So pretty much a clean slate. Everything we had, we were able to identify and really found nothing that we felt need to come back to the board.
Okay, any questions for Joe?
I only have one, and it was because I was looking at interest. On page 12, I think it is. It shows interest, it shows realized and unrealized gains, and on page 8, you have 2020 without the unrealized gains, and 2019 without the unrealized gains, and 2020 with. So if you go to page 8 in the document, the top cash flows from operating activities, and this may be correct. You're obviously better at this than I am, but it says cash from funding agencies 154,376. That's the page I'm on, right?
Mm-hmm.
It's interest income and other 276 is with the unrealized gains. 114,895 is without it. There's like a $10,000 difference. So I don't know if that's correct or not, but.
Basically what ends up happening is as things are being recognized and taken into, so there is a delta or a change between year to year that gets reflected there. So that could possibly be correct. Again, I don't have the numbers exactly in front of me, but I'm thinking that is correct due to a timing issue of when the interest matured, and basically recognizing them in that current year.
That's exactly right. It moves in and out of the change in value is as securities mature, you realize the gain and you take it out of unrealized gain. So sometimes that looks a little quirky, but the numbers all flow and match.
Thank you. Everything else looks great.
Any other questions? Anything?
I'm very surprised how good you are at all the FAD acronyms and everything else. So
I have to tell you, I did do a little bit of homework before I came in this morning, and I did bug Patty for a few of them, so I can't take all the credit.
That was filter avoidance determination or whatever, but you rattled it right through it. So
I want to thank our auditors. Patty is amazing. She always does a great job with us each year. Joe, I appreciate all the organization your firm does for us. It really went very smoothly this year. It was very quick.
Yeah.
All we need now from the executive committee is to vote to present to the board at our May meeting. We need you to, basically approve what's been presented, and so that I can get it posted to the New York State ABO site by the end of the week, next week, or, by March 31st.
I'd like
So,
to make-
and we'll present at the board meeting in May.
So I'd like to make the motion that we approve this draft audit as the corporation's audit, so it can be presented to the general members.
Second.
All in favor?
Aye.
Aye.
You all scared me there for a minute.
Thank you guys
No, I'd
for the
like to,
time.
Thank you for an excellent audit and an excellent report on the audit. And, thank you very much for your service.
Sure. Thank you guys. And if anybody has any questions, Joanne has my contact information. Going through the year, not necessarily, even if it's just in relation to other items, please feel free to give me, reach out to me, give me a buzz. This time of year may be a little slow getting to you a day or two, but after tax season, I should be pretty quick on getting back to you. So thank you guys.
All right, thank you.
Patty had her hand up there. Did you want to say something, Patty? No.
Just thank you, everyone.
Thank you very much.
Thank you also, Patty. And Joanne, thank you. The audit definitely reflects the excellent job that you've been doing. Good job. Okay, Kevin, you want to talk about PRCR 701?
Sure. So we have a PRCR 701 is a channel stabilization project within Pound Ridge. The project is to be installed on private property in a municipal drainage outfall, which then leads to wetlands in the Ward Pound Ridge Preserve, I believe it's called. The project will net us, I believe it's close to 9 kilograms. Installation agreement has been signed. Project was found to have no negative impacts on the area. This will be a fairly fast construction, I believe, that we can get in and out and bank our kilograms in good time. No significant impact. The seeker will be I think a standard approval for us that we have.
I believe we have a resolution on this.
Right.
Somebody like to introduce the resolution?
Yeah, I'll propose it as long as you'll tell me why we're not doing this on Park Road South as well.
On what road?
This resolution is strictly for Park Road North, right?
Right.
What you
Well,
doing
yeah,
about Park Road South?
No, there were no issues over there for us to address that I'm aware of. It's just
There aren't?
Parkview Drive North.
Okay.
If Pound Ridge has any issues, I'm more than happy to go in there and take a look and clean them up.
Park Road South is, I think, in Lewisboro.
Oh, okay. Well, if you have any issues, again, I'm more than willing to meet with you and figure it out.
All right, so moved.
We have a second?
Second.
All in favor?
Aye.
Aye, obviously.
Aye.
Aye.
We got to figure a better way to do this.
Well, why don't you say all opposed?
All right, I'm doing this from memory here. Do we have a resolution for the award of the construction contract? Do we not?
Yes.
Yeah.
Yes.
Somebody like to introduce that?
Oh, where is it?
Okay, the bids were tabulated. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bids for the project. In general,
Are
I'd
you
like to
going
say
with Coil?
we are going with Coil. That is correct.
Okay, I'll propose that we adopt
There it
this then. Because you're going with the cheapest.
Correct. There was one of the bidders at Contact Construction Technology withdrew their bid as soon as we opened it, maybe within an hour or two, because of a mathematical error that they had. They provided a very fast response to that and requested to withdraw their bid. And at that point, we moved on to Coil at 112. I think you'll see that a lot of the bids all came in pretty close to right around that range. We've worked with Coil before, had great experience, had no problems with them, happy with the product. They've done multiple channel stabilizations for us. And I'm confident they'll do a good job in representing us.
Yeah, and the efficiency is fantastic still.
Yeah.
I propose we award this contract to Coyle as proposed.
And could I just add that the resolution should just reflect that you have accepted the bid mistake, the withdrawal as part of that decision making. So you've gone to that Coyle as the next lowest bidder, as the remaining responsible bidder, lowest responsible bidder.
So added.
Thank you.
Do I have a second? Warren, second.
Second.
All in favor? Aye.
Aye.
Thank you.
All right, Kevin, CF 601.
Okay, very similar project for channel stabilization within the town of Carmel. This one is located on New York City DEP property. There is a land use permit in place for the project. We will be setting up a meeting with the Forestry Division in quick order to get out there and address the channel. There is 2 parcels to the north of the project on private property, which again, we have an installation agreements for, which some work will take place, but the far majority of the work will be on DEP property to address the sediment loading into the Croton Falls Reservoir. Again, this is a project that we find is an unlisted action and will not result in any significant adverse impacts on the environment. And would like to move forward with a negative declaration.
All right, again, we do have a resolution on this.
Yes.
Yep.
Peter, are you introducing the resolution?
Okay, I was waiting for somebody else to do
I
this one.
introduce it.
Well done, Rick.
We're going to introduce the resolution. Do we have a second?
Yeah, I'll second.
All in favor?
Aye.
Aye.
And we have a resolution to award construction.
Resolution to award construction to, where'd we go?
I think, Kevin, again, I think we first have a resolution, do we not, regarding the bid mistake?
Correct. Yes. Again, we had there was a bid mistake that was made by the contractor. They notified us with an explanation as to why that occurred. The mistake was reviewed by our contracted engineer. They recommended accepting the withdrawal based upon the board's acceptance, of course, which would move us to Werner Construction Management, which is a slight increase in dollar value, but it's still well within the similar range of where Ben Cozy was. But they did feel as though Ben Cozy felt they made a mistake and would like to withdraw their bid. So we moved on to Werner Construction Management. We have not worked with them in the past, but I did reach out to a few references that they listed, and everybody was very confident in the work that they could provide us. So at this time, we'd like to move on to awarding the contract to Werner Construction and accepting the bid withdrawal from Ben Cozy Inc.
So there's 2, if I could say, there's 2 separate actions here. The first one is the withdrawal of the bid mistake, and the second one is the award, I believe.
Which agenda item is this?
Agenda item 7B, addendum item C. It's at the bottom of, if you scroll down from the bid tab, it's together with the bid tab.
It's right up on the screen.
Thank you, Linda.
I see.
Number 7B, addendum item C.
Right, but you have to scroll down.
Okay,
So can we get a motion on the resolution?
which one do you want to do first, Chris?
The bid mistake.
Withdrawal, right,
What? The
bid
withdrawal?
right,
The big mistake is the one we're doing, correct?
correct.
Okay. So I'll make a motion to move this bid R 0325-05 forward.
Do I have a second?
Aye.
All in favor? Aye.
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 Any opposed?
You know, I wish my board meetings were like this.
Yeah, now we have a resolution to approve the construction contract.
Okay.
So just so I understand now, we're going from which agenda?
It's agenda item 7B, addendum item C. It's the second resolution.
Do you want to do the neg deck first?
We already did that.
We did.
We already did that? Okay, I was asleep.
So we're doing the award of the construction contract. Would somebody like to introduce that?
The
Yes.
construction contract is for corner construction again.
Yep.
Good efficiency, good project.
Like 164, is this the one? I apologize, I'm looking at my own computer, I don't see this.
164, $376.
Yeah. So I'll make this motion for resolution 0325.
I think Peter's already done that.
And I'll second it if nobody seconded.
All right, we've got a second. All in favor?
Aye.
All right, we're gonna start meeting back at the offices again.
Be good.
Will you provide refreshments?
Sure. You
Yeah,
remember,
but it's gonna be alcoholic.
Yes, we need it.
All right, have we taken care of agenda item number 7 now? I
Yeah,
believe.
what's happened to these companies that they submit bad bids and have to withdraw them?
Better answer that, but I was really happy to see the turnout that we had.
well,
Both sides almost had
probably
over
they
10
found out that,
contractors.
they were 55,000, everybody was 100 and some odd, and they say, oh, math error, as opposed to just, we didn't. I've had some come in that have been, 7 times other people's. It's been bizarre. They're throwing stuff at the wall.
Kevin,
Okay.
O&M update.
Hey, you talk about, if we come back to the office, you remember Kathy Doherty? She was supervisor at Kent a number of years ago.
Yeah,
We used to do egg souffles with, it was unbelievable the amount of food she had when we came in to do a Kent meeting. So
yeah, she started baking the night before.
and that's on you, Rich.
O&M update. We are, again, we're going to start ramping up, looking at everything that's that coming out of the winter that might need attention. This is the time of year where I will be sending out notifications to every town as a reminder, if you didn't maintain a certain project in the last calendar year, you're being watched a little bit closer this coming year. So it'll be I expect every town to probably receive something on some level. Just saying, hey, get your eyes on this. Let's make sure it gets cleaned up, and let us know if you need any help. So we'll continue to work with everybody to push it forward, and we expect to have everything cleaned up again this year. It was a good turnout last year, and we expect to see the same again.
Evan, can you do me a favor? Those should be addressed to Peter Rippinger in my town, but can you copy me?
Yes.
On the financial of O&M, I just want to say that we sent out 13 billings for those municipalities that have to pay the corporation. And we've already received 7 checks, so we're waiting for 6 more. Once we get those, which I anticipate in the next month, I'm hoping we get them all in. Once we get them all in, we will pay those municipalities that did the work for 2020. And then I will be submitting Millie to you, to Westchester, for reimbursement for the Westchester municipalities to make them whole, and Westchester will pick up that tab. They'll pay us and we'll pay that out. That usually happens in May, June.
Right. So before you leave, that's the important thing as far
I
as
will
I'm
take care
concerned.
of that. If not, I'm not leaving the planet.
I
I
don't
do
know how
have a
much every
phone.
cent to get paid, so I'll work it out if Joanne can. I think North Salem gets a big chunk.
Yeah, no, we'll
Thanks,
take care.
Joanne.
And Marcia will be on top of it. By the time I go, she'll know what has to be done.
I'm sure.
Okay.
All right. We are down to a performance review on Corey. I'd like to make a motion. We go into the executive board go into an executive session. And
Second.
Christine, Joanne, Kevin, and Linda into executive session with us. Do I have a second?
Second.
Yeah.
All in favor?
Yes.
Aye.
All right. Linda, can you make that happen?
Sure.
Still in the waiting room?
Sure. Yep.
Where did
Rich, while we're going in, is your email address rdw at what?
bestweb.net or supervisor@pattersonny.org.
Okay, I'm gonna send this to RDW, the thing I promised to
All
send
right,
you.
great. Thanks.
Okay, do I have everyone out that needs to be out?
Well, everybody but Corey.
employees
Oh,
and just-
Corey.
Gotta get rid of Corey because we're gonna talk about him.
Oh,
Yeah, but he's right next to Linda, so he's not, it's not like he's not gonna hear what we're saying.
Oh, good. So we can like say it without really meaning for him to hear it.
All right.
okay, so you want to make the motion and then I'll stop recording.
To do what?
I don't think she heard the motion because she was working on this stuff. Could you repeat the motion to executive
Oh,
session?
so I made the motion to go into executive session and allow Christine, I'll throw Patrick in there this time. I forgot Patrick, I'm sorry. Linda, Joanne, and Kevin into executive session with us.
They are within executive session.
And I know you had a second.
Yeah, Peter, I think seconded.
Yeah, I seconded.
We did all
Thank
We all voted.
Right.